Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. But markets, nothing exciting happening on that front, right? Opening in the green and then gave up all its gains and has remained in that range. Look at the chart as of now as well. Last couple of hours, it has been moving in that range, trying to go up, but yes, not managing to reach the green. As of now, Nifty down almost 0.2% in trade. Sensex 2 down 0.4% in trade. And Nifty Bank, a bit of a muted day coming in for the Nifty Bank as well. But let's look at, what's doing well today. Let's pull up PSU banks. Those are doing quite well today. PSU Banks is the top sectoral gainer as of now. So all those PSU names holding on to good gains. We have Nifty Metal, which is holding on to gains as well. And the broader markets, that's the side of performance, which has been doing quite well in trade today as well. Some of these individual names like IRB Infra, IFCI, we have IRB, which is holding on to strong gains today as well. Other than that, we have HPCL, Z, BHEL, BPCL, Syngene among the names which are buzzing in trade. But on that note, let's get started with all the stocks that have been buzzing in trade as well, Shrishti, on the back of news flows and technicals, right?
Well, yes, and with this, let's welcome our team of researchers as well as our technical expert for today. On the technical side, we are being joined by Osho Krishan, Senior Analyst and Technical and Derivative Research at Angel One. And on the research side, we are being joined by Vamakshi as well as Snehi. A very good afternoon to all three of you. And let me kickstart highlighting the first counter in focus, and that is Gail, one of the result candidates today. Just yesterday, we did see the numbers coming in, and today brokerages has come out with their note, wherein first up, Nomura has maintained a neutral rating on this one and have hiked the target price to 185 rupees from 133 earlier. They are highlighting that it was a strong show in Q3, led by higher than anticipated petchem business profitability, and they have raised their FY24 EBITDA guidance by 7%, and for FY25 and 26, EBITDA has been raised by 11 and 13% respectively. This is primarily to factor in the higher gas transmission tariffs as well as high gas marketing profitability. And Investec has also maintained a buy and have hiked the target price to 200 rupees from 155 rupees earlier. And just yesterday, post the earnings, we did see a good gains on Gail. So post the brokerages notes and target price hike, we are seeing the momentum continuing for a stock like Gail. And other than that, another news flow says that Gail and ADNOC Gas has inked a long-term LNG contract fueling India's natural gas industry growth. So on the back of these news flow, Gail is in focus today.
Okay, that's Gail, but let's move on, talk about ITC, because that was also in focus today. A bit of a weakness that we've seen in the stock after the Q3 numbers were a bit of a miss, especially coming in on the operational front, as well as in terms of the cigarette volume, which was below the street estimate. So the cigarette volume what the street was expecting was at around 2%. What it came in, and this is an inferred number, so that came in at around -1 to -2% is what we could say in terms of the cigarette volume growth. Other than that, in terms of when you're looking at it, the other factors that are there, FMCG business of the company did well. The hotel business, that continued to see a strong growth as well. And in both this FMCG business, also the premium side surely did quite well. Premium segment for FMCG as well as the cigarette business was doing much better than the mass segment is what the company has highlighted. Other than that, let's talk about the paperboard segment. That has continued to be under pressure because of there are a lot of other external factors like China supply as well as global market, muted domestic demand. That is something that has impacted the paperboard business. But now in paperboard business, the company has highlighted that they're going to be focusing on more value-added products. So that maybe later on is something that we could start seeing the benefits. But as of now, because of the cigarette volume especially being a miss, we're seeing that ITC is down and out in trade. It's down 2%. Even brokerages have cut a bit of the target price as well. Whether you look at it in terms of Jefferies or Morgan Stanley, they've cut the target price mildly for ITC.
All right, moving on then, and let's shift focus to Ahluwalia Contracts, a stock which is holding up a gains of almost 5.5% in trade today. Osho, tell us how are the charts looking like for this one. The stock is very near to its 52-week high levels.
Now, very good afternoon. Can you please repeat the name of the stock?
Ahluwalia Contract.
Okay. Yes, this company has seen a very drastic up move in the recent period. And if I will be talking about the broader term perspective, then it has been in the cycle of higher highs, higher lows. And in today's session, there has seen a lot of buying traction. Currently hovering, as you have mentioned, it is just hovering near the 52-week high. So I'm expecting that there will be a strong breakout once it breaches the zone of 870. On immediate basis, 900 should be the target. But looking at the overall sentiment and the momentum in this counter, one can definitely look for a higher target of nearly 940 to 950 on positional basis.
Okay, on positional basis, 940, 950 could be the target for Aluwala contractor. But let's move on and talk about Bajaj Finance, Ramakshi. This one is down and out in trade. Numbers, obviously, I believe is a factor, but what else is impacting the stock today specifically?
Well, yes, Vinny, Bajaj Finance, largely when we look at the numbers, they were largely in line with what we were estimating and what the street was estimating. Let me quickly take you through some of the key highlights. The key positive this time around was that the company reported good growth on the AUM, customer acquisition, operational efficiency. In fact, the AUM growth was the strongest seen in the last 16 quarters. Apart from that, as far as RBI's temporary suspension on e-com loans and loans on Insta EMI is concerned, the management has said that they have scanned the entire framework. They will be filing for compliance soon. Risk metrics were also healthy across businesses, but barring the rural B2C business. Now, they also announced some key management portfolio changes, and in fact, the management said that they are creating a matured organization. They are investing in people, but the key negatives this time around, and that is the reason why the stock is beaten down in trade, is elevated loan losses and the impact of the regulatory action. Asset quality also deteriorated mildly, and when we look at the NIMs, that is the net interest margin, that also saw a contraction of almost 11 basis points on a sequential basis, mainly on account of a rise in cost of funds. So those were some of the important factors that we must keep an eye out for Bajaj Finance. As of now, the stock is down and out in trade today.
Okay, let's move on to the next stock in the NBFC space. And Osho, you've picked up Manappuram Finance. What's the view on Manappuram Finance in terms of technicals? Where do you see it headed?
Manappuram Finance has been consolidating for past 3 to 4 weeks in a zone of nearly 50 odd points. But in today's session, even from the yesterday session, there has been some kind of traction. It has attempted to give a breakout, and today definitely we have witnessed a breakout in this counter. So approximately 15 point of upside can be seen. Immediate target comes around 190 followed by 195. So even for fresh accumulation also, one can definitely look Manappuram Finance for short-term perspective. 195 should be the target on the higher end, but looking at the overall trajectory, it has the potential to even surpass the zone of 200 in the coming period. So short-term traders, the target should be 195, but for positional or medium-term perspective, 200 plus target that can be seen in Manappuram Finance.
All right, moving on then in Snehi, a stock which is locked on an upper circuit of 20%, that is Orchid Pharma. Tell us what's the story here.
Well, absolutely, Shrishti. Stock locked in upper circuits since the start of the trading session today, and that's on the back of a drug approval. So, Orchid Pharma's drug Exblifep has been granted the European Medicines Agency approval. Now, what's key to note is that it's a landmark achievement for India's pharmaceutical industry, because it's the first drug to be invented in India that has achieved this standard. This is what the company has said in an exchange filing. Now, more about this drug. It's a drug that is used to combat antimicrobial resistance. So this drug has received the EMA's recommendation for marketing authorization for use of complicated diseases like urinary tract infection or pneumonia or bacteremia as well. So while any disease that originates from microbial issues, this drug can solve it. So it has a big global market, and on the back of that, the company has also released some positive outlook, and well, on the basis of that, the stock is locked in upper circuit.
Okay, that's Orchid Pharma for y'all. But let's move on and talk about BEML, because that one is buzzing away in trade today as well, up more than 6%. And in the last 1 month, 6 months, also has managed to maintain and sustain that up move that it has seen. Osho, BEML now, is it the time to start booking profits, or are you expecting a further upside?
See, basically, there has been a consolidation range of nearly 200 odd points for BEML. 3,000 to 3,200 was the zone, and today we have witnessed the breakout in the consolidation phase, for which the upside target was nearly 3,400, but it has definitely tested the same in today's session only. So the immediate range comes from 32 to 3,400 levels. So one should definitely try to book their profits as of now, or even they can accumulate on a slighter note, in a staggered manner around the zone of 3,200 for short-term perspective. There has been a strong movement from the zone of 2,000 towards 3,400 in this counter, so it might attract some kind of profit booking in near future. So 3,400 is the target that I was expecting for this counter, and it has already retested it. So one should definitely try to book their profits. On the downside, 3200 is the zone where one should try to accumulate it again for a short to medium term perspective.
All right, that's the take coming in on BEML. But for this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back. Welcome back to Market Fatafat, a show where we are highlighting all the counters that are seen to be buzzing, either on the back of the news flow or on the back of the technicals. And one of the result candidates in focus is Dr. Reddys, slated to report its numbers today itself. And this time we are expecting a decent set coming in from Dr. Reddys, wherein the top line is expected around 7,000 crores. That will be a flattish sort of a growth on a sequential basis. EBITDA is expected to be at 2,022 crores, while the margins expected to be flat near to that 29% odd mark. But the profit figure, that's expected to be at 1,337 crores this time around. And the US sales is expected to do better for the company, wherein a jump of 9% on a YY basis is what we are expecting, while the India business is expected to see a jump of 2 to 7%, though there was a weak acute season. But other than that, the kind of new brands as well as some bit of a push coming in from the price hikes is expected to support the India sales growth story. Other than that, key to watch will be the number of filings that the company is expected to do in the next 12 to 15 months in the US market. So that way we will be watching. But looking at the kind of numbers that these pharma companies are reporting from the likes of major drug makers like Cipla, that has reported good set of numbers. So a decent expectation is what we are drawing for Dr. Reddys as well.
Let's move on, and the next talk on the technicals is CAMS. And Osho, when you're looking at CAMS, specifically since November, we've started seeing a bit of a sharper up move. What's the view now on CAMS?
See, overall, as we have mentioned, from November, there has been a very strong upsurge in this counter, and from there onwards, it has underwent under time-wise correction phase. So as of now, it is consolidating in a narrow zone, and I'm expecting that from here onwards, there can be a strong bounce that can be seen in this counter, because on technical front, it has taken support of the 50-day exponential moving average, plus there is positive crossover that is being seen in this counter. So from here onwards, one can definitely try to accumulate this counter. The immediate target can be around of 2850, but once it surpasses those zones, then it has the potential to reach the zone of 3000 in short-term time frame only.
Okay, Osho, thank you so much for that update on CAMS. But let's move on and talk about Marico, that reported its numbers yesterday. When you look at it, it's overall an inline set of numbers that came in from the company. And obviously, in terms of volume growth, also 2% volume growth is what the company is seeing. Now, to talk more about the numbers, let's bring on board Saugata Gupta, MD and CEO of Marico Limited. Thank you so much, Mr. Gupta, for joining in with us this afternoon. And let me start by talking about the revenue growth. Now, when you're looking at it, that is, what the company has highlighted in the con call is that it's expected to see an up move and a move towards the positive territory in Q4. This time, it was a bit impacted. So, are you expecting the rural areas to start participating in this growth? What are you expecting in terms of the rural recovery?
As far revenue growth is concerned, I think the extent of price deflation has got anniversarized. So therefore, we believe that whatever volume growth will deliver will translate into revenue growth and maybe a little plus 1%, which we'll be getting, because largely most of the core brands price journey, that anniversarization is over as we step into Q4. Now, this quarter, while we delivered a 2% volume growth, we also took, as you know, stock reduction in GT, which was otherwise the growth would have been maybe 4%. So we expect, I think, largely rural to start improving. There are three things which will help the rural improvement. Firstly, I think inflation is finally tapering off. Secondly, most of the large players, including us, have taken pricing action, because what had happened during inflationary times was that a lot of small players who were not present during the COVID time had come back into the market, and they were obviously, had attractive pricing, and that led to some of the, consumers switching or downgrading into some of the smaller brands. I think that is largely over. And I think the government investment continues to be high in rural. So we believe that rural will gradually pick up. So I think the way that we see it is that we should be, as we step into next financial year, I think volume growth will start improving.
All right. Very good afternoon, Mr. Gupta. This is Shrishti also joining in. Wanted to understand what is the growth expectation for FY25 and what will lead to the growth in FY25? What's the expectation there?
And I would say it's too premature. I think what we can definitely look forward to is, two things. One, an improved volume growth. We expect, as you know, this year we did some consolidation in foods. Our foods business to accelerate. Our digital brands are well on track. I think the core volumes will definitely improve. And lastly, I think we expect to deliver, at least low to mid-teens profit growth, and that is a combination of also of India business and how the international business performs.
Mr. Gupta, let's just talk about margins, because like you indicated last quarter, you're expected to see a good expansion. And that's what has continued even in this quarter. 21% is what the EBITDA margin level is at. Do you think this level is something that is sustainable in FY25? Or are you expecting that we could see a further expansion going forward as well?
Yeah, depends on how inflation plays out next year. Having said that, I think we have taken significant steps in terms of, especially as you know, the digital and the food business, significant improvement in the burn rates. Some of the digital brands between this year and next year will mostly be break even. Secondly, this year obviously margin also got impacted by the significant currency depreciation, and especially in some of international markets. I believe that will also improve. So I think while we have peaked on the margin, I think there will be certain drivers which will be in place to certainly help maintain this kind of a margin. But as I said, that we will be able to give a better outlook definitely by the end of next year, Q1, because then we have an outlook also of our input costs and commodities.
But also, Mr. Gupta, on the Saffola edible oils, earlier you have been a little bit cautious on the volumes in order to ensure a threshold profitability. But how do you see this changing in Q4?
I think, Saffola went to a period of hyperinflation and hyperdeflation, and therefore it required stability in terms of to drive growth, because a lot of source of growth happens for people upgrading, and therefore secondly, we had taken a conscious call during this period to ensure a threshold level of margin. Having said that, I believe that now things have stabilized, and unless there are any, macro, in which impacts edible oil prices, we certainly hope that Saffola to get into mid single digit, volume growth in next year. And also, I think given that there is no deflation, that will translate also into revenue growth.
Okay, and just lastly, in terms of obviously talking about the recent acquisition Plix, how was the performance there, and what could one expect in terms of numbers from Plix going forward? Any target in terms of revenue we could be expecting here in synergies?
So I think if you look at Plix, I think it's in a very exciting space of wellness and nutraceuticals, and I think the great thing is that they have been able to have product formats that appeal to the youngsters far more. I think in terms of innovation capability, consumer insights, digital marketing, they are really, I think, top quartile, and we are very excited by the potential Plix offers. As we had said, that Plix has crossed the 150 crore mark this year, 150 to 200. Obviously, it will be on a path of growth. Compared to other companies, the cash burn is very, very low. And I think which is also shows that it is managed well. I think going forward, both Plix and True Elements, we haven't leveraged general trade. As you know that in the case of food, general trade plays an important role. And therefore, I would see that will be another growth lever for the digital food brands next year when Marico starts some limited distribution of it in general trade. And that will also help the Marico food portfolio because it then gives a critical mass.
All right, with this, Mr. Gupta, we'll let you go on that. Thank you so much for joining us today on ET Now. So that was the management of Marico highlighting that they are expecting rural growth to start improving, the inflation is tapering off, and the volume growth is expected to see a gradual recovery in FY25. And the stock is also holding up a gains of 1.5% as of now. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more.